Miami is a hub, and it's becoming the Wall Street of the South. That's how we look at it. And before COVID, Miami was already a hub for Latin American founders and for Latin American business. Now you're bringing in California, New York, and you're bringing other, let's call it talent from the US. So we believe it's a great melting pot, and you have proximity to Latin America, you have proximity to New York, you have proximity to Europe, you have a great airport that is only 15 minutes away from most of the neighborhoods in town. That comparing that to JFK or to LaGuardia or to the airport in Sao Paulo or to the airport in Mexico City, it's a great factor to consider.
Hey everyone, this is Prashant and I'll be your host for the VC10X podcast. And today we have Daniel Lloreda with us. Daniel is the co founder and general partner of cross border fund HTwenty Capital. They have operations in the US and LATAM region, investing in early stage technology companies in the B2B marketplaces and B2B enterprise SaaS IT verticals. In this episode, we talk about investment thesis at HTwenty Capital, how they are bridging the LATAM and US startup ecosystems, the differences in the US and LATAM markets, exciting trends they are seeing right now, the reserve strategy at S20 Capital, and lots more. So, without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help VCs start and run their own podcast. While I was running VC 10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey Daniel, so good to have you on the VC10X podcast. How you doing?
Everything is fantastic, Prashant. Thank you so much for hosting me today.
Yeah, it's a pleasure having you on. To start things off, can we first have your background story and how you started investing?
Awesome. So I'm Daniel Lloreda, co-founder and managing partner at H20. I'm originally Colombian, living in the US for more than 15 years. I moved to the US when I was about 15, did my prep school in the US, undergrad in Boston. Then in 2015, after graduating from undergrad, I worked at a private equity fund doing company building. And then in 2018, I launched H20 with my co-founder and managing partner Mauricio Porras. We're good friends from college, and we started the fund soon thereafter. Now we're investing out of our second fund, which is a $62 million fund too. And I recently moved to Mexico City with my wife and our 1 year old baby. So exciting times for us.
Absolutely, that's an incredible journey there. And can you tell us more about the mission at H20 Capital?
Of course. So H20 is a cross-border VC fund that seeks to support entrepreneurs in the early stages of their journey. We want to be that first institutional check in a cap table, and we want to support these entrepreneurs with their go-to-market planning and talent acquisition. So helping them from that zero to one stage mostly, and being a hands-on partner on that, let's call it first 120, 180, 360 days.
Totally, that's an incredible thesis there. And how do you operate across LATAM and US startups? So tell us about the connection there.
We have three offices. We have an office in Miami, we have an office in Mexico City, and another office in Bogota. We're a team of seven, six investment professionals, and one platform lead that supports with the value-added services for entrepreneurs. So the Miami office mostly covers the Latinx and the US Hispanic opportunities in our portfolio. The Mexico office covers Mexico and cross-border opportunities because some of our companies have their back office in Mexico and their sales team in the US. And then Colombia mostly covers the Andean region, which covers Colombia all the way to Argentina.
Absolutely. And what are the kind of startups that you're mostly interested in at H20 Capital?
Yeah, so we're mostly a B2B fund and some verticals that we're really passionate about: software, fintech, marketplaces, and now, of course, AI. So within software, we're looking for vertical software businesses with fintech adjacencies. In fintech, we're mostly looking at fintech infrastructure companies. So companies that could provide the B2B infrastructure and backbone for other fintechs to exist. And sometimes there's a lot of adjacencies with our vertical software companies. And the third is marketplaces, mostly asset light, SaaS enabled marketplaces. The fourth is of course Gen AI, which combines mostly with all of the three other categories.
Absolutely. That's very interesting. And what are the kind of things you're looking for in the companies that are pitching to you? And what are the traits that you like seeing in founders?
So the first, we're very founder driven. So we're looking for top founders that have previous experience in what they're building, or in a previous company that they had a successful run, or where a lot of key learnings were made. And we look for entrepreneurs that have that extra drive and that extra willingness to go the long route and to succeed. So I would say it's more of a personal, feeling when we meet a founder, if there's chemistry and if that founder has what he or she requires to build and execute and attract talent and raise capital and build product and go to market. So that's from a talent perspective. And then just from a quantitative perspective, when we invest pre-seed, there's not much on a traction basis. So we're looking at what is that vision that the founder is building on. What is the TAM? Is it bigger than $1 billion? What is the geographic focus? What is the go-to-market planning? Where are they launching? Is it within thesis at H20? Also, very important, can we add value to that founder at this stage? That's really important for us because we want to make sure we have a seat in the table and we can add value.
Absolutely. And one interesting thing about pre-seed is that a big portion of the portfolio doesn't work, but some of the startups work, and they eventually cover up for all the others that didn't work, right? So, is there internally, do you have any expectation that okay, this percentage of startups will probably not work out? Do you have any internal assumptions on that front, or it's always good to hope that all of them will work, but of course, uh, any internal assumptions on that front?
The VC game, you know it. Most of the companies won't work, and it's only a few that do work. So when we're building a portfolio, we're thinking of a portfolio construction strategy. We want to invest in at least 30 to 35 companies in the pre-seed and seed stage. We want to have more probability of finding those three or four breakthrough companies in our portfolio. And for our return analysis to work, we need at least four breakthrough companies owning at least a 5 to 10% equity ownership, and that's what we're targeting. So many of our companies will potentially not work out, and some will, and they'll compensate for the ones that don't work out, and it's the nature of the game.
Yeah, totally. And I think in one of your LinkedIn posts, you mentioned that you consider that Miami can be a great bridge between LATAM and US ecosystems, right? So throw more light on that.
Yes, Miami is a hub, and is becoming the Wall Street of the South. That's how we look at it. And before COVID, Miami was already a hub for Latin American founders and for Latin American business. Now you're bringing in California, New York, and you're bringing other, let's call it talent from the US. So we believe it's a great melting pot, and you have proximity to Latin America, you have proximity to New York, you have proximity to Europe, you have a great airport that is only 15 minutes away from most of the neighborhoods in town. That comparing that to JFK or to LaGuardia or to the airport in Sao Paulo or to the airport in Mexico City, it's a great factor to consider. Then you have the favorable state taxes. You have the weather. You have the increasing you know talent quality. All of that combined makes Miami a great hub, and we believe it's the best city for a founder that is looking to build, perhaps recently graduated from business school and does not want to return to Mexico or does not want to return to Brazil, can live in Miami, can attract talent, can build a global business from Miami.
Absolutely, that's an interesting insight there. And since you're exposed to both these markets, the US market as well as the LATAM market, and you're originally from Colombia, right? So, how do you look at these two different markets? What are the differences, and what are the different dynamics of these two markets? And do you have any different approach of how you attack the US market and how you attack the LATAM market?
So the biggest difference between both markets, and talking about LATAM as one market and the US as a second market, is the TAM and the exit potential. So of course the TAM in the US is larger than in LATAM in most cases, and the exit potential in the US is larger than in LATAM. So one of the key questions in the LATAM market, and I'm sure time will tell, and there will be positive outcomes, is the liquidity. Naturally, the stock market, the stock exchange in the U.S. is larger and more liquid than the Brazilian or than the Mexican stock exchange. And sometimes LATAM companies do go public in the U.S., but naturally, if they want to go public in the local markets, it's a much smaller market. So ultimately, smaller or lower market cap and lower float, meaning that analysts at hedge funds or at pre-IPO funds won't be as interested as investing, or they cannot because there's minimum uh, thresholds. So I think that's a very important piece regarding US market being larger than the Latin market. So preparing for smaller or slightly smaller outcomes in LATAM, meaning you need to make sure you have the right equity ownership to come in and to deliver an outsized return.
Absolutely, totally agree. And what are the most exciting startup trends you're seeing right now?
So of course, a lot of people are talking about Gen AI, and it's really exciting. In our opinion, it goes way beyond that. We believe that all of our companies need to have an AI component, and that AI component needs to create efficiencies within their day to day and ultimately in their unit economics. So I'll maybe talk about a few other trends to not talk about the one that everyone is talking about. We're very bullish in unsexy businesses generally. So we helped a founder go to market with a marketplace that enables independent pharmacies to connect with pharmaceuticals. We helped the founder build a company that enables chemical companies to sell to plastic transformers through this marketplace with a drop shipping SaaS enabled component, and the software powers the backbone or the back office of these chemical or distributors. So that's another example. And both of these companies have an AI component. And then we are also investors, very recent investment in a company called Fudo, which is a vertical software similar to Toast in the US. It's a vertical software for restaurants. We're also recent investors in a company called Darwin AI, which is a software for customer support that enables retailers to optimize their ticketing and their sales conversion funnel, enabling an AI solution. So those are a few of the different companies, and they should give you a sense of the verticals that we're investing in and that we're bullish on.
Totally, that's an exciting set of trends and startups that you've back there. And uh, like when you are backing these companies, they are coming to you at a stage which is super early, right? So what do you think these founders are actually need the most help with, and where you can help them the most?
So some founders need a push to build, right? That's the first requisite. Is this founder ready to build? And sometimes they need a push. So that's a good first. Once they're ready, once they have an idea, once they have you know uh, go to market idea, does this founder have a co-founder? Is this founder the technical founder, and does he or she need a more commercial CEO type founder that can help with fundraising, that can help with talent acquisition, that could help with go to market? So that could be a founder matchmaking opportunity where we can help connect to great people, assuming that this founder already has a co-founder, has a team, and now needs to go to market. Is this the right go to market? Does this founder have the right pain point identified? And is this the right solution? Is this the right Trojan horse to go to market? So we also look at that, and that represents product, represents a bit on the market dynamics, and also on pricing and an acquisition strategy. Once that founder has launched the business, and let's say it's month 6, and that founder needs to raise a seed round, we'll be there to help them build a great syndicate of a lead and a co-lead, and potentially the weekend lead for them to build and raise that seed round to continue expanding. And then let's assume that founder is going for a pan-regional expansion or geographic expansion. That's why H20 has an office in the US, an office in Mexico, and an office in Bogota. We help these founders go to market in different regions, and that's very valuable to them.
Absolutely, it sure is. And uh, so, one thing that I read on your LinkedIn again is VC generally talk about backing moonshots, to be unicorns potentially, right? But you talked about that even middle-sized companies can produce great outcomes, right? So it doesn't always have to be a massive company with a unicorn outcome. Even if it's a $100 million outcome, that's still a good outcome, right? So talk more about that.
Yeah, so that's a great point, and this is going back to the difference between the U.S. and the Latin American market. Knowing that in Latin America, I mean, there are limited outcomes compared to the U.S. given the liquidity, we have to assume that not all our companies will be multi-billion-dollar IPO moonshots. We're of course hoping and very happy if one or two become IPO moonshots in LATAM. But even for those companies, you have to wait 10 to 12 years to IPO, and that's a really long time. So in our portfolio construction, assuming $62 million fund two, we want to deliver a 4x gross, 3x net return to our investors. Hypothetically, we need to create $240 million in exit proceed value. And to build $240 million in exit proceed value, and we own 10% ownership, we need to create 2.4 billion in market value. So how do we get there? We need 4 companies with a 10% equity ownership on a fully diluted basis at exit that we can sell for $600 million. To sell a business for $600 million, you do not necessarily need an IPO business. You can have a very successful, fast growing, profitable business that can be attractive to a private equity or to a large bank or to a multinational that wants to expand into Latin America. That's on the LATAM thesis. We also invest in the US. So our investment thesis allows for that cross border angle. And of course, in the US, we are looking for bigger outcomes. And in that regard, we could be a bit more flexible on the equity ownership because we know that the numbers, work on an outsized basis on that potential exit.
Absolutely, totally agree. And let's go back to the history of H20 Capital for a bit. So about Fund One, right? So what were the key learnings that you gathered from Fund One, and how have you implemented them now in Fund Two?
So I would say we've become the main experts in the spaces that we're good at. Fund one was more generalist. Fund two is more B2B focused and mostly investing in software, fintech, marketplace, AI companies. So that's one. The second one is diversification. Fund one was more concentrated. We had about 12 companies. Fund two has 35. We're still keeping the ownership targets at a very high level. So it is concentrated in the total available capital that ultimately goes to one specific position. Nevertheless, we have more first checks, and that ultimately allows us to have a higher probability of finding our breakthrough companies. The other, I would say, change is the team. Our team grew from 3 people to 7 people. That means that we have more hands to support our portfolio companies. We try to limit our portfolio support or co-ownership to 5 to 6 companies per investor. So it's a very hands-on, wide angle of approach with our portfolio companies. And then I would say the other one is naturally the US to Latin American cross-border angle, where given nearshoring trends and given certain geopolitical risks that the world is undergoing, which benefit the nearshoring trend, not only for Mexico, but we're also seeing it in other countries such as Colombia and Chile. This is a very powerful thematic for our fund two that we're leveraging and helping our entrepreneurs build with a cross-border mentality.
Absolutely, totally agree. And uh, so for the fund one was a generalist firm, and fund two is a more focused firm. Is that because of the results that you saw and wanted to focus more on a specific niche of B2B SaaS? Or was it because of positioning the fund as a specialist VC firm in front of LPs, because maybe they were more interested in that? What was the reason for that?
That's a great question. I would say our thesis, was adapted as we learned what our core competencies were. So we became really good at marketplaces. We were one of the first, if not the first, investors in the largest super app for construction in Latin America. We helped a founder build a marketplace for the pharmaceutical business. We helped the founder build a marketplace for the chemical business. So we're still bullish in marketplaces, although some funds in the US are a bit more bearish because they tend to be capital intensive. Nevertheless, there's not a one size fits all for a marketplace, and there's some asset light, SaaS able marketplaces that are still very attractive. So in the software component, also I would say focusing on our core competencies, we became very good software investors, and software businesses are highly scalable and high margin, and there's a great network effect component that that goes into them. So those are some of the reasons. I would say it's not particularly because we wanted to portray to our LPs a certain story. I would say it's because we started becoming domain experts in certain verticals, and we had more data points because we had made investments and we had more use cases, and that ultimately allowed us to become a bit more domain specific. I would say, at least in Latin America, given the market is so nascent, trends do change over time, right? 2021, 2022 was about crypto. This year, it's about AI. 2020 was about quick commerce. 2019 was about logistics. So, as you know, VC is a herd mentality type business. We don't really like it that way. We like to create our own thesis, our own opinion around things, and we're very bullish around being a B2B fund with having these verticals as your core competencies. And the reason of being a B2B fund, tying it and closing to your question, is because we can support our companies, connecting them with potential commercial partnerships and making commercial intros with their LPs, with their corporate partners, and with companies that we know and that we have relationships with at a local level, both in the US and LATAM.
Absolutely. Thanks for sharing that. And also, let's talk about the reserve strategy at Fund Two. If you're keeping aside any reserve to invest in follow-on rounds, so about that.
Yes. So Fund Two is expected to invest in 35 companies. We've made 18 investments. We'll make another 17 investments during the investment period. This is a 2022 fund, so we've been very diligent with the capital deployment. And in that regard, we're in a very good position because we have plentiful reserves. So when we make an investment in one of these 35 companies, we will reinvest in our breakthrough founders. So that means that we could take a business from a pre-seed to a seed to a Series A up to a Series B. We have enough dry powder to invest up to Series B through this vehicle, so that is positive. And then regarding the dry powder, we have plentiful reserves. On a portfolio construction, we try to go 50-50 first checks, follow on, mostly over time.
Right. That's incredible. And let's do the last main question before we do the rapid fire round. And this is about what would be your advice to founders who are currently building, especially during a market that where it's not as easy to raise capital.
I'm seeing a lot of funds at a pre-seed stage that are looking for traction and that are looking for a certain ARR threshold. So definitely funds are looking for more data points. My recommendation would be start with design partners that you know and that you can close quickly. Get them to sign, ultimately maybe after day 30, 60, or 90, to pay, not only to sign but mostly to pay. Work with them very closely and tweak the product based on solving that deep pain point. I would start very vertical and focused. That might have TAM limitations, but over time you could expand with a multi-product perspective, going from software to fintech, or you can increase the ARPU in different ways, or that multi-product allows you to expand TAM as well. Once you have milestones completed, once you have traction, once you have product, once you have numbers, I would then fundraise. So if you're in a position where you could bootstrap, which I know most founders are not in a position, but if you are, I would I would go the bootstrap route for the first 6 months. And this is a very honest opinion. I'm shooting myself in the foot because I'm a VC and I want to invest in your business, but that's what I would do. Um, and then once you have that traction, you raise your round. So maybe you can start with a few angel investors, and with those angels, raise $500,000 and build your first, team. And then you can go and raise your pre-seed once you have more milestones. That allows you to go to market with a much stronger punch, and also to avoid, unnecessary dilution in subsequent rounds. So being capital efficient from day zero.
Absolutely, and that also makes you a much more lucrative investment to make for the VC as well, right? And reduces your effort in trying to fundraise as well. Awesome. Now let's do the rapid fire round, wherein I'll ask you five quick questions about the investing you're doing at H20 Capital, and you have to give five quick answers, right?
Two:
Okay, so the first one is, what are the sectors and regions you invest in?
software, fintech, marketplaces, AI as verticals, and then regions. We do Spanish speaking Latin America, which covers Colombia, Mexico, all the way to Argentina, and then the US Hispanic market, mostly focused on Latinx founders.
Right, and what's the typical stage of investment?
We come in pre-seed. We want to be that first institutional check up to a seed, and then we follow on until a Series B.
That's awesome. What's the typical check size you put in?
Our typical check size is about $1 million for a first check.
Where can founders apply for funding in case there's a direct way?
There's not a link to apply for funding, but there's multiple ways of finding us. You can find us through our website where we have our emails. You can find us through LinkedIn. You can find us through one-to-one uh, connection, or referral. That's obviously the easiest way. And then we have scouter program which scouts on the ground. That can also be a great way to get to know us.
Absolutely. Last one. Where can our listeners follow you?
Yeah, so LinkedIn is the first. Also, Twitter is the second.
Right. Awesome. I'll make sure to put all those links in the show notes below. Thanks so much for making time for this, Daniel. It's been a pleasure hosting you.
Thank you so much. Pleasure to meet you. I really appreciate the opportunity. Have a great rest of your day.
Thank you. Same to you.